How to invest when recession comes and market crashes. Hi, this is CF Liu from CF Liu channel. Now, it's really horrifying when you just start to learn about investing. And shortly after that, there's this talk of recession coming. Everything starts to fall in value. Now, the market seems like crumbling down. You see, when you first start about learning how to invest, or what you learn about what to invest or how to invest, is of very little importance, because you see, up until when you really start to put down your own money in the market, in the stock market or in the property market, that is where really the rubber meets the road. Now, you can be a professor in investment in theory, but being invested during the recession time is the main reason causing you to doubt your own investing decision. Plus, you start second guessing yourself, and basically whatever value investing knowledge that you have learned from all the courses or from all the seminars, you can basically just throw them out the window. Don't be the guy that reads everything about mountain biking but never actually ride a bike. After all, when everything is easy, everyone can be a genius, everyone can be an expert, everyone can say how they can invest or how to invest to make a quick profit. Heck, I would bet that even if you put a monkey in charge of any unit trust fund, that monkey can make easy profit when the market is bullish, the oil price is all-time high, there's this high GDP growth, and there's this good jobs prospects. Take it from someone who started investing in 2008, 2009, when the US subprime mortgage crisis actually hits. It caused everything to go down, and it has this reverberating impact across the stock market, across the property market around the world, and suffering 50% losses, like I've shown you over here in one of my stocks holdings back then. It really gives me a unique perspective of how to really invest in the market and stay invested, even though everything that you know of is down in value, and unique insights how they behave not only in the down cycle but also in the up cycle. Now, many stock market guru or property market guru tell you story as there's no such thing as market downturn or recession, as if they have the power to defy the forces of the market, such as this. Everything comes with a cycle when it comes to investment, and there's a lot of human emotion involved in this up and down cycle. See, today I'll be very afraid if something that invested does not come with an up and down cycle, does not have its inherent downside risk, and it claims only have upside without any downside, because that means it could be a Ponzi scam. Now, there's only so many things that can really spark a massive and prolonged panic sell-off in the market. In the year 2020 context, there's an alarming spread of this illness which causes death as soon as a month time, and it originates from one of the second biggest economy in the world at this point of time. But let me explain in compact and layman form how this market panic or sell down causes a domino effect across businesses, economy, and also consumer spending. China has become indispensable, an important role player in the supply chain across the globe. Whatever you and I are using right now, the whole thing could be an American brand or European brand or Japanese brand, but those brands had these products made in China, or the components or the raw material that comes into this product you and I are using actually are being made in China. And this is the problem over here. When this pandemic really drives a halt in production across factories in China since January-February 2020 period, there's this very serious of shortage of parts that goes into a lot of these modern day products that we are using. And in the case that you think, well, a lot of these non-China companies, American companies, go to China just because of the cheap labor benefit. Now, you couldn't be more wrong. Take this from Apple CEO at this time, Tim Cook. And he famously said in an interview, he said that Apple had their iPhone made in China not because the labor there is cheap. Tim Cook said China stopped being the low labor cost country many years ago. Now, the reason is because they come to China from a supply point of view. The amount of skill and the amount of the skill that they require in one location is available in China but not available in the US. So in case you still think China is a low labor cost country, you are outdated. Now, this explains why China has become an integral part in global supply chain. There's supply and there's a chain. So as you know, once the chain is broken, the supply doesn't move. There's a lot more complexity in this. For example, you may be asking, well, if some of these parts are not available, can't they just like seek for a replacement part from other suppliers from another country? Now, sure, right? When you go to supermarket, if you're used to using compact toilet paper, can't you buy Scotch toilet paper? You can. After all, you just need to get your butt wiped, right? As the saying goes, does not matter it's a white cat or a black cat. As long as the cat catches the mice, it's a good cat. So you see, when the manufacturing of these products or the raw materials shuts down, businesses which depend on these parts or raw material have to stop production. Imagine you can't really buy an iPhone if the iPhone doesn't have a screen. Now, because businesses have no complete product to sell, which means consumer have nothing to buy. And then this spills over to these businesses not meeting their expected revenue numbers. Investors become very pessimistic and they dump their shares in these companies, which causes the stock price to dip. And as this happens, more and more people notice this. Then its snowball becomes like a plunge. It's a matter of meeting or missing the revenue expectation. You see, expectation are always already priced into the market according to efficient market hypothesis. Massive bull or bear market is caused by something that happened out of what is planned or expected, no matter the size.
You know what I noticed? Nobody panics when things go according to plan, even if the plan is horrifying. Tomorrow I tell the press that like a gangbanger will get shot, or a truckload of soldiers will be blowing up. Nobody panics, because it's all part of the plan. But when I say that one little old mare will die, well, then everyone loses their minds.
Now, in case you are not financially inclined, this is what I mean by efficient market hypothesis. Now, business become less profitable. There's an uncertain outlook and prospect, and end of the day, they might have to cut salary or even retrenches people. And then people have less money to spend to buy product and services. Services just like aspirational purchase, like your LV bags, you know, branded cars and all that, because they are in a tight financial situation, or simply because they cannot leave their house due to quarantine. They avoid from traveling for business or vacations. And then you see company or like AirAsia or even sectors like aviation are really impacted. Now, to make things worse, people with good or bad debts are late on their loan repayment. They could even go into a default, let's say if they miss their loan repayment for 3 months straight. Now, property investors who are highly leveraged find themselves stuck in the time of recession. So much for investing in property is always a good deal. Then when the situation gets worse during recession, you see things like bankruptcy and also foreclosures. Even the banking sector, when it comes to economic recession, the sector with the most money in the system are actually not spared because their profits are impacted by increasing non-performing loans. Then this becomes like a full cycle, a perfect storm if you may. Now, there's so many uncertainty when recession hits. But this one thing is certain. Nobody can be certain how long this is going to last or how severe it could become. Not a single human knows in advance how quickly this can blow over and how worse can it get before it recovers. And then you see government try to intervene by boosting up the economy to prevent the economy from falling into a recession via all these stimulus packages, creating money out of the thin air to throw into the economy. Or they could do things like temporarily reduce taxes or waive it for a certain period of time. These are all artificial measures. Not to say they shouldn't be done, but I think the law of nature and the law of supply and demand actually holds more power over how the market reacts in recession. Now, here's all I've told you just now are basically economics 101 without having to study economics. These are the information you need to succeed in a practical world. No need to actually take any subjects or a degree in economics or learn from any economics professor. Now, when we are discussing this, we really cannot run away from discussion from the law of supply and demand, which is simply considering the investment asset like stocks or real estate property are no different than your grocery item, just like toilet paper, surgical mask. The law of supply and demand states when there's a lack of demand, people do not want that thing or fear of that jeopardizing their livelihood or finances, prices fall to a level where it's too cheap to ignore. And then people start rebuying that again. Therefore, we can say the demand is back in. The prices rises again to a reasonable level. So in other words, it is a constant tug of war and interacting factors of the ever-changing human expectations, emotions, self-interest, and sentiments. The exciting or scary part is all these elements do not work in isolation. At one end of the spectrum, you have excitement or euphoria, which drives the prices of an asset up to an insanely high levels, overriding any fundamentals. We have seen that in real estate property market in Malaysia in 2010 to 2013. And then there's the other end of the spectrum, you have fear and horror, with depress the price so fast that you don't even have time to blink, ignoring any common or logical sense. But unlike grocery items, where we know what it is, we can see grocery item which we can see, feel, and understand how to use it. Investment is one big area in our life where there are so many unknowns. Naturally, we are afraid of the unknowns. So in this video and in this entire CFU channel is actually dedicated to helping you understand how the entire system works. Which is why you should smash on the like button now and hit on subscribe, because there are more. Because this is what other people are saying about CFU channel. Anyway, as I was saying, I reckon the more you understand about what happened in the past, in the present, is your ticket to feel more in control of what to do and what not to do, especially in the times of uncertainty, volatility, and complexity. Which in the context of investment, this mantra holds very true because there are more things we cannot control than the things that we can. I'll share with you this. You want to have the serenity to accept the things that you cannot change, the courage to change the things that you can, and the wisdom to know the difference. Realizing that any investment in stocks or property market is no different than life. If your life is never a straight line, why would you expect the stock market to go up in a straight line? However, in defining moments like this, these are the actionable steps you can take to weather through any crisis. Only invest the sum of money that you don't need to use for the next 5 years, at least. Now, it's very easy to say, be greedy when others are fearful, but practically, if you lose your job and your business is losing money, buying more investment assets when the prices are going down will be the last thing on your mind. So you have to understand this saying in your context, not to just take this as it is. It's very hard to be actively still investing, even when prices are going down and everything in the market is a bargain, if you do not have an emergency fund to cover your living expenses, including your monthly financial commitment or obligation for the next 6 or 12 months. It's easy for anyone or any guru to tell you to buy and hold, to don't sell, which is what you intended to, but you just had to sell, even with a major loss. When you lose your job, you are 3 months behind your house or car payment, the banks are calling you non-stop, you can't find another job, and you have emptied out your emergency funds just to make ends meet. The second thing is, if you are retiring or gonna stop generating active income soon, in less than 5 years, when recession hits, this is the time where your investment asset value is going to drop, and this will absolutely kill your retirement nest egg because you lack of time to recover from the losses now. So what you need to do is to rebalance and reallocate your assets or portfolio. I have a weekly online web class which focuses on some of the best asset class to make your retirement portfolio to sustain as long as possible throughout the entire up and down cycle, where you will be least impacted by market downturn or recession. Details in the description below. Check it out and register for the upcoming online web class. Number 3 is you need to deleverage and sell underperforming assets, especially if your investment assets are highly leveraged like property. You see, keeping an investment asset with little chances of turning around in the next 3 to 5 years is doing more harm than good, because you are missing out on the many opportunity costs out there. You are leaving money on the table for your money to work harder for you. If you have high financial commitment, and if your company goreng you sotong, that is when you really start to panic. So be proactive to reduce both the financial commitment of your underperforming assets, such as real estate, property investment, and also your lifestyle expenses. It's a misconception when you read Robert Kiyosaki, Rich Dad, Poor Dad, and they say mortgage is always a good debt. It's not when your rental income cannot cover your bank mortgage repayment month after month, year after year. Which is why you see nowadays there's a lot of these lelong units. These lelong units are not really rundown or damaged units. They are new VP units. Units that has just gone through vacant possession. Shiny brand new unit that is going for auction or lelong. Don't take it from me, take it from someone, a group of people who actually left comments on my Facebook page. Don't let that happen to you. If you want definite answers whether to sell or still hold your underperforming property or assets, you want second opinion on how to proactively decide whether to sell your underperforming asset now or it's still worth to actually keep on holding for the next few years, I want you to check out description below. It will bring you to another upcoming web class that I'm conducting, which will cover this topic. With that said, guys, thank you for watching, and don't forget to also like and subscribe to CFU channel. Until next time, I hope you have benefited a lot from what I've shared.